TheoTrade. This is Don Kaufman. It's May 20th, 2019, and you are watching the TheoTrade evening video. About 8 minutes left in today's trading session. The S&Ps are down just about 21 points, which is just shy of a 1% move to the downside. The Nasdaq, though, taking the China news on the chin, specifically some of your chip-related stocks, semiconductors, down about 1.6% on the Nasdaq. But I'm going to tell you what, looking at this marketplace and looking at some of the percentage declines, whether it's on the S&Ps, whether it's on the Nasdaq, all right, the Dow, for the most part, unscathed, only down about a 0.5%. There's one thing that just really stands out, and that's kind of bothering me as we've kind of watched this trading session progress, and that has everything to do with the fact that, when was the last time you saw the S&Ps down 20, 25 points? The volatility is not participating. The volatility is just simply not participating to the upside. And listen, I'm not talking about the VIX. A lot of people that kind of tune in day to day would know this. The VIX, this is kind of my predecessor's, indicator. The VIX is kind of like, last to the party. What I'm really talking about are the volatility futures. And I'm even going to go further than this. I'll look at the VVIX. By the way, when it comes to the volatility futures, forget, and let me just highlight this for a second, forget about these 2-day volatility futures. Those things are toast. Forget that they're up some 45 cents. They're toast. The volatility futures you really got to key into, that's right here. Okay, there's the 30-day volatility futures, all right, and they're trading 17.16. They're basically unchanged in the day. Oh, but still my heart, they're up 13 cents. Does this marketplace not view risk the same way? Does it not view risk? By the way, they're up 9 cents right now. Does it not feel, okay, the fear of a marketplace selling off at all? Because that's what this is effectively telling me. And I'll even take it a step further. If you start looking at the 30-day vol futures, which are right there, I've highlighted them, versus, for example, the 58-day volatility, okay, we don't have an inverted volatility skew. And that means the 30-day risk is not above the 58-day risk. What gives? Again, the market's selling off here a little bit. We'll laugh, we'll cry. But again, the volatility, it's not feeling it. And I said I would further that. Again, the VIX, if you are into the VIX, it's only up 37 cents. We've seen days where the S&Ps have sold off, five, and the VIX would actually react more than this. When I look down towards the bottom of the screen, I also see the VVIX. That's the volatility of the volatility index. And I look at the VVIX, and that thing is down almost 2% today. Again, traders, they're just not feeling the fear. And I'm a little bit bothered by it, again, inside of today's trade. Now, I'm going to give you some reasoning for it. And some people are probably going to look at this and think to themselves, that is incredibly bullish. I'm actually going to give this couple of more specifics. But as I said, it's bothersome because when you see sell-side activity, you want to feel, okay, that risk is growing. All right. Why? Otherwise, we'll just keep slipping off into the sunset like this and it's all over but the crying. You need to see volatility increase, okay, to get a feel for, number one, how intense the sell side is, which is clearly, okay, there isn't any intensity to the sell side today. In fact, I'll further that with just look at the volume. Okay, the volume today, what are we doing? 1.5 million S&P contracts. It's pretty negligible. We've had days just recently, up days that are actually doing more volume, more liquidity than today's 20-point move to the downside, right? Right now, it appears that the marketplace is pricing today's move as isolated specifically to these handful of technology stocks, which, again, I'll get to in a moment. When the China and trade war is kind of dominating the headlines, you need to push that aside a little bit and listen to some of the noise. Because if you listen to the noise, you're like, the sky is falling at this point. In which case, I'm telling you, the S&Ps are down. Not only isn't the sky falling, the market's not reacting, okay, to the sell side activity really at all. But we'll push that aside for a second. We'll talk about some of the semiconductors and, we'll talk about Apple in a couple of minutes. What I first want to get to, okay, are levels, okay, and I really want to show you why the marketplace isn't necessarily reacting heavily today and has a lot to do with the bond trade. The bond trade, as of today, okay, first thing that stands out, there's not that much volume. Second thing that stands out is, again, you see the S&P selling off and the bonds, they're just kind of backing off a little bit. Again, not a huge amount of volume. They backed off a little bit, about 0.2%. The notes are also down. As I said, not staggering volume. But because the bonds and notes are down, okay, this helps the financials. In fact, as we come close to the cash close, and again, we're 3 minutes to the bell, as we come close to this cash close, the financials are actually rallying. So when you look at the market weakness today, I mean, think about if the financials were participating to the downside, this marketplace would be getting decimated. The reason I wanted to bring the volatility to your attention and say, it's really bothering me. Nah, what's really bothering me is the financials are not playing a role. In fact, the financials, they're holding the S&Ps up. And the reason I'll continually mention this, I'm telling you, the financials are the linchpin in this marketplace, and they have been for quite some time. One of the notes I was making on the kind of the weekend video and a lot of the times last week was about this 2650 level inside of the financials. Okay, I cannot reiterate this enough. The financials right now are holding on to the entire marketplace. And one of the reasons that I view, volatility is not going up is because the financials are not participating in the sell-off. Nobody feels any fear unless the financials are starting to get whacked down, unless things like emerging markets are in trouble. Right now, this little sell-off today means absolutely nothing. You almost have to brush it aside because it didn't have the financials as part of it. Even when you start to look at things like advanced decline line, I mean, it's kind of rare when you see advanced decline line. Like the advanced decline line is not that bad inside of the S&P 100. It was much worse at the open, but that's not that bad of an advanced decline line. The S&Ps are down almost 20. And you're like, what gives? Well, I'll tell you exactly what gives. Advanced decline line doesn't mean a whole lot when your largest market caps. What are the largest market caps? You got your Microsoft, you got your Apple, you got your Facebook, Amazon, you got your Google, all of them participating in sell side. What we have today, is a mega market cap sell-off. Nothing more, nothing less. Now, let's actually go over to levels. So we talked about the 2650 level inside of the financials, but now let's go to levels inside of the S&Ps. Again, I'm going to push aside. Doesn't matter what you think on Apple. Listen, Apple could come apart at the seams. Apple could be down another 5 or 10% in the next few days. But so long as the financials hold up, the S&Ps can slip down a little bit, but the S&Ps, they're not getting crushed unless the financials, start to unload. And again, when I say I can't stress this enough, you have to realize the implications here, and they're pretty straightforward. If you trade S&Ps and you've got a portfolio, you've got stocks like the Boeings and the Caterpillars and the Costcos, and I can go on any of the financials. All of this is predicated right now in the entire marketplace. Your 401k is predicated on what those financials are going to do, not just looking at Apple or a handful of semiconductor stocks that are getting killed because of the trade war out there. So with that, let's look at the S&P futures for a couple of quick kind of if you will, level lessons. One of the first things you're going to notice is that almost all of today's trade took place at a gravity point. These gravity points, and we're coming right to the closing bell, these gravity points right there. There's the closing bell. Those gravity points, specifically this one, the 2842, and I'm going to go ahead and close up that left side bar. That 2842, listen, people, this thing has held weight now, for well over. And in fact, I'm going to open up a 3-year chart just so you can see, all right, this thing was initially, right back here, which was in August of 2018. We're moving on to, a year kind of time frame that this thing has been in play periodically. But when I say that all the trade today has happened around 2842, that's where we came down to. Touched it in the overnight session, tried to break away, rallied up, and effectively where we're going to end today's trading session, we're on it. We're literally, to the penny, we're on 2842. Can't make that up, right? Wait, freeze the screen. 2842 on the button. So of course the question then looms immediately. People are like, okay, where are we going? So I'm going to give you some really detailed levels in here. Let me take this and zoom down the time frame. This is now a 30-day 1-hour chart. All right. In terms of gravity points, now gravity points, they're big levels that you could trade into. And you can use these if we start to break away from one gravity point to another. That is, if we break off 2842, where are we headed? To the downside. Let's look to the dark side first. To the dark side here, that happens to be 2811. 28.11, which has played a role substantially even in trade just, over a week ago. We bounced back up off of it back to what? 28.42, made another shot at 28.11, came back up to 28.42, and here we are once again at 28.42. Now, there are some levels that I'm going to point out up here that are not per se gravity points, but they're what I would term kind of key inflection points of trade, okay, and have been key inflection points. One of the key inflection points in trade has been somewhere right around here. It's right around 28.60. When I say kind of a key inflection point, it's been a point where we've pivoted substantially higher or lower. The lower has actually come right to, the 28.42. Higher has actually been to 28.83. Look for 28.83 if we do rally at all tomorrow. And you're like, that is a big rally. Yeah, you're telling me, okay? If we start to rally, and this is where you got to be a little bit cautious here. If we start to rally, it's a straight shot. It's a straight shot right up to that 28.83. From there up here, you have 29.11. But again, don't get ahead of yourself. 28.83 is to the upside. To the downside, you're looking at 28.11. And the reason that I'm bringing this to your attention is there isn't much in between. We have been literally pinging fast 28.83 back down to 28.42, all the way down to 28.11, and that's effectively what we've done for, again, a pretty good amount of the month of May. So here we are again, May 20th, and we're pinging back and forth. So again, the upside versus the downside, actually quite similar. Again, a shot down to 28.11. All right, that's the market losing about 30 points. A shot up to 28.83. That's the marketplace rallying just over 40 points. The risk reward right now, is almost the same to the upside to the downside. What we would need to see if we were to not only trade lower, but again, you want to trade lower, and we actually got to go lower than 28.11. Volatility would have to grip hold, but more importantly, a trip below 28.11, and I want to be clear about this, a trip below 28.11 inside of the S&Ps, specifically for it to crack through 2,800 in the S&Ps, that has to be met, with the financials being under 26.50. So that would be your confirmation that that's it. This is going to be some fairly wild sell-side activity in the marketplace. And I wanted to provide those kind of details for you because that's what I'm going to be looking at in the days to come. Now, in addition to it, of course, I'm going to be looking at the bonds. But the bonds right now, the bonds are going to be on the leading edge. Listen, if they're going to rally out and break higher, the bonds break higher, that's going to be the trigger to sell what? The financials. The financial sell-off, it's actually going to take the S&Ps substantially lower. Right now, what we had today, again, this is a big nothing burger. And the S&Ps are closing right around our gravity point. The VIX laughed in all of our faces. But I'll reiterate a point that I made in this weekend's video, and I'm going to make the exact same point again. The market implied volatility. Now, what's implied volatility? That's what the marketplace is, implying with options, obviously. The implied volatility is just hideously low to me versus the kind of movement. Even today, we had over a 20 what? We're all the way traded down to 28.32 on volatility over this weekend. For the options that expired Monday, they were like 10.8%. Look at this. The volatility for the remainder of the week. How many trading days are left in the week? There's 4, right? Tuesday, Wednesday, Thursday, Friday. Although Friday, come on, we're coming into Memorial Day weekend. We're all packing up. We'll be here the whole week, but we're still packing up. All right. You only have a 43-point expected move on a 16.8 vol. The reason I'm like, what? Because take a look, the movement, in the overnight trade, including today, that was basically the expected move, almost to a T. Like, you can't make that crap up. It's just over $40. So there's a lot in this marketplace that's kind of left to want to desire, if you will. Again, we have low volatility, but the risk seems what? Not only apparent, it seems rather high. We have the financials that are not playing a role. If the financials apparently don't play a role, nobody seems to care. This is, again, going to be the focal point for the remainder of the week. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.